The market opens in 4 minutes. You've been here since 5:47 a.m. 3 monitors, 1 lukewarm coffee, and a stack of pitch decks no one will ever touch. You are 23 years old. You have $94,000 in debt. Your salary felt enormous until you saw what your managing director billed this morning. So, you run the numbers. You format the models. You don't complain. You learn to read a 10K in 40 minutes. That's survival at this level. Then, one morning, you find it. A number wrong, buried deep inside your senior associate's model. An error worth $2 million. You stare at it. Your heart hammers against your ribs. You quietly fix it in your own file. You say nothing to anyone. Not because you're complicit, but because the system doesn't reward honesty. It rewards discretion. You realize right then that the spreadsheet isn't just data. It's a battlefield where the truth is secondary to the narrative. Your days are 14 hours, sometimes 18. You stop counting after month 1. You watch which MD to stand near in the elevator and which ones to avoid like a plague. You don't have power yet, but you know exactly where it lives. You process a $430 million deal from a cubicle on floor 31. You never meet the client. You never see the boardroom. But your numbers are in that room. Your labor is the ghost in the machine. And somewhere in that distance, you start to understand the geometry of this life. You are the foundation. The part nobody sees. The part nobody acknowledges until it cracks. 2 years later, the fluorescent lights feel less like a cage and more like a spotlight. You're in the room now. Not the main room, the side room, the war room where associates sit and wait with laptops open like loyal sentinels. But you're there. And that's the shift. You're structuring now. Junior pieces, but real architecture. You draft the terms on a $180 million mezzanine financing. You sit across from a CFO for the first time. You explain a covenant breach scenario without flinching because you've run that scenario 40 times in the past week. That's your currency. Preparation. The deal is a leveraged buyout of a regional logistics company. It will almost certainly result in operational efficiencies. A polite term for firing 300 people in Ohio. You don't model the human cost. Nobody asks you to. You model EBITDA margins and debt service coverage. You present it cleanly, bound in leather, printed on high-grade paper. The deal moves forward. You collect your bonus. You don't think about Ohio. You rationalize it the way everyone does. You didn't make the world. You just ran the numbers. The second rule of the machine becomes clear. Proximity to capital is proximity to power, and proximity to power means proximity to decisions you'd rather not have made. You start building your own loyalty network. A VP who pulls you onto the live deals. An associate who feeds you internal rumors. You protect each other not out of friendship, but out of mutual utility. Welcome to the first layer of the machine inside the machine. By the time you hit vice president, you've stopped counting hours and started thinking in deal flow. You are managing people now. Their output, their errors, their very lives. You have a team of 4 analysts who look at you with the same hollow-eyed hunger you once had. You close your first transaction independently. A $620 million acquisition financing for infrastructure in Southeast Asia. Your MD is on the cover sheet for the glory, but your name is on page 6 for the work. However, in the room, the client is talking to you. They are looking at you when the interest rate swaps get complicated. That's the shift at VP. You're no longer the support, you're the dealer. You start to see the ethical architecture of high finance more clearly, and it looks like a house of mirrors. The target company's pension obligations are restructured post-close. The acquiring fund needs a 22% IRR to satisfy its limited partners. The pension restructuring is what makes that possible. You know what it means for the retirees. You know the math doesn't lie, but it also doesn't feel. Nobody says it in the meeting. The deal closes in 11 weeks. Your year-end cut is $480,000. You wire $40,000 to your parents. You buy a 2-bedroom in a neighborhood that signals arrival. You tell yourself the pension fund was already insolvent. You might even be right. But the third rule at the VP level is the one that stays with you. You stop asking if the deal is good. You ask if the deal is executable. At this level, that is the only question left. Then comes the director years. You are sourcing now. You are a rainmaker. You aren't just executing deals. You are originating them from thin air and handshakes. Clients call your personal cell at 11 p.m. Private equity shops route deal flow through you because you've never missed a deadline and you've never leaked a secret. Discretion is now worth more than intelligence. You manage a $1.2 billion book of advisory mandates. You sit on pitches as the senior banker. Your associate runs the model, and your VP coordinates the due diligence. But you sell the vision, you sell confidence. That is the true product of the 40th floor. Certainty in an uncertain world. You start to understand leverage in its purest form. Not financial leverage, but informational leverage. The knowing. You know which tech giant is about to run a strategic review before the CEO even tells his board. You know which sovereign wealth fund is quietly building a position in copper before the disclosure hit the wires. You don't trade on it. That's for amateurs and people who want to go to prison. But you know. And the knowing makes you sharper, more decisive, more dangerous. Then you lose a big one. Not because of the numbers, your numbers were perfect, but because a competing MD went to the same private club as the chairman's brother-in-law. You lost a $2.8 billion mandate because of a club membership. You don't lose your composure. You join 2 clubs within the month. At the director level, you realize the deal is never just about the math. It's about the shadow theater behind the math. Promotion to managing director feels less like a victory and more like an integration. The calls come earlier now, often from private numbers. You manage 12 client relationships, each worth tens of millions in annual fees. You are no longer working for the bank. You are the bank's relationship with these entities. You sit on the internal credit committee. You see a $900 million revolving credit facility for a company with a deteriorating balance sheet. You vote yes. Not because the credit is clean, it's filthy, but because losing that relationship would cost the firm 3 times the exposure in lost future fees. It's a political decision disguised as a financial one. You travel constantly. Singapore, Zurich, Abu Dhabi, London. You have dinners with ministers, not politicians, but the people who actually run the ministries. These are not business dinners. They are relationship maintenance. Capital doesn't follow returns alone. It follows political alignment, regulatory familiarity, and the unspoken trust between the right people. Your identity has quietly restructured itself around the machine. You look in the mirror and you don't see the 23-year-old with the lukewarm coffee. You see a node in a global network. You don't notice the change because it happened one spreadsheet at a time. There are 14 partners in your division. You are one of them now. Your name isn't on the door, but it's in the ledgers that matter. You have carried interest, skin in every game. When the fund performs, you become wealthy beyond the dreams of your younger self. When it doesn't, you feel the cold breath of the market on your neck. You stop optimizing for the annual bonus. You start thinking in 5-year fund cycles. You start thinking in decades. You lead a $4.3 billion acquisition of a European energy grid. 3 months of negotiation, 4 regulatory jurisdictions, 2 competing hostile bids. You run the consortium. Your fund, a Middle Eastern sovereign wealth co-investor, and a Canadian pension plan. The closing dinner is in a room in London that doesn't appear on any public floor plan. You structure the offshore holding through a Luxembourg sidecar, feeding into a Cayman feeder fund. The tax efficiency is substantial. The structure is entirely legal, blessed by a phalanx of attorneys from Dublin to Singapore. You sign the documents without a hint of hesitation. The deal adds 180 basis points to the fund's net IRR. Your carried interest on this single transaction will compound to over $40 million. You stop attending most social events because the conversations aren't useful anymore. Your social world has narrowed to people who control capital. You realize that you haven't spoken to someone who earns less than 7 figures in 3 years, excluding the people who serve you. You received 2 calls today. One from the Gulf. $7 billion seeking deployment. They want your fund to anchor the deal flow. The second is from a finance ministry. Not a banker, the minister himself. You take both calls from your corner office on the 44th floor. There are no trading screens here, no Bloomberg terminal. Just glass, silence, and a phone that connects you to the people who move entire asset classes. You are not in the market anymore. The market is in you. Your sentiment, your positioning, and your deployment decisions are the price discovery. When you buy, the world watches. When you pull back, analysts write white papers for weeks trying to guess why. You sit on 3 corporate boards. You advise multilateral development banks. You do not lobby. You advise. The influence is the same, but the optics are better. The moral architecture is now so abstract it's invisible. You don't feel the layoffs downstream. You feel the fund return. You optimize the return because that is what the system requires. The 7th rule: there is no outside perspective anymore. You are the perspective. Now, you are 71. You don't carry a title. There is just a name, no designation below it. Senior advisor, chairman emeritus, or simply a name attached to a massive family office. All are technically accurate. None of them are the whole truth. You have stakes in 5 funds, 2 private banks, and a reinsurance vehicle in Bermuda. You've been inside the machine for 48 years. It has been here much longer. 3 central bank governors know you by your first name. Not because you influence monetary policy, That's too crude. But because the information flows in both directions, and you are the most efficient filter, your committee deploys across sovereign debt, distressed credit, and currency carry structures in 14 markets. Total AUM is above $90 billion. The exact number is known to 4 people. You are one of them. You don't trade your position. Trading is a reaction to the market. Positioning precedes the market. 2 years before anyone else, you see a currency block facing liquidity stress. You structure accordingly. Not to trigger the collapse, but to be on the right side of the canyon when it opens. When it happens, your funds gain. The press calls it prescient risk management. You know it was just the math of the inevitable. The cost of this level is silence. The people you truly trust number fewer than 10. Beyond that circle, there is only utility. You have more access than anyone in your life can understand, and you have almost no one to tell. You are too embedded to be removed. The system would cost more to dismantle than to keep. That isn't power. Power is loud. This is something quieter, colder, and more permanent. You sit in a boardroom in Geneva. There are 4 people. No agenda on the table. No presentation on the screen. You speak for approximately 6 minutes. The room is so quiet you can hear the air conditioning. They listen to every syllable. When you stop, the room moves. The capital moves. The world moves. And somewhere, in a glass tower in a city that never stops moving, a 23-year-old opens a terminal for the very first time. His badge says, Analyst, first year. The badge has always said that. It always will. He thinks this is about his salary. He thinks the system rewards what he puts in. He thinks he's going to be the one who changes the game. He doesn't know yet what the system actually rewards. But he will find out. He will find out one spreadsheet at a time. The terminal blinks, the market opens, and the machine takes another step forward. It doesn't care if you're the foundation or the architect. It only cares that you keep the numbers moving.